Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky of Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today, I want to talk about deals getting done during these times. It's not for the faint of heart. I have 4 deals in escrow right now as I'm selling 2 deals and buying 2 deals. There's retrading going on, not only by buyers, but also by lenders. You know, if you're buying, make sure your loan is locked and make sure you know when does that locked rate expire. If your loan isn't locked, find out what the cost may be to lock it, as rates are going to jump soon. I'm seeing softening of about 10% in the markets that I'm investing in, as well as others. If you're selling and able to lock in huge gains, that's great. That's what we're doing. If you're not able to lock in those huge gains, you may want to wait, another year and a half, depending upon where the market is. If you have room on that loan. Don't sell just to sell because you're afraid of what's going to happen in the future, unless you're running out of cash reserves or if you have a reason to sell. If you're buying and able to underwrite for increased rates, some cap rate regression above the norm, lower rent growth than previously, able to be even more conservative, then that's fantastic. Again, that's what we're doing, and I'm psyched for our investors to get into some great deals. I was recently at a mastermind with some of the top investors in the country. The consensus was there is opportunity coming. Opportunity because deals were bought that weren't underwritten for increasing rates. Didn't have the cash reserves to cover the increased debt. Opportunities for deals that will be coming out of bridge soon and will be underwater because they underwrote too aggressively and can't sell the property at the reversion cap they underwrote to. Opportunities for deals that were not asset managed correctly. And perhaps they didn't implement their business plan, or just relied on the property manager. Maybe they didn't manage expenses well or didn't add enough income. So there will be properties like that will be there for the taking. We expect interest rates to come down in about 18 months or so. They're going to go up, they're going to come down. That's historical. Now, I'm not, I don't have a crystal ball, but that's what I'm expecting, and others that I'm expecting, others that I've talked to are expecting as well. A bridge debt is attractive right now because of the ability to refi for a lower rate in a few years when interest rates fall. But make sure what can be scary is that 3-year loan. So make sure you have you're covered with the yields that the lender is requiring. Obviously, you have to be conservative in your underwriting. What works for one market may not work in another. We invest in areas with large population growth, rent growth, and job diversity. That allows me to sleep better at night versus a property that's in an area with flat or declining population growth. For those that invest in a market like that, you probably are buying at a much higher cap rate and need a reversion cap even higher than that. Okay, so be very, very careful. Now is the time for strong asset management more than ever. A strong asset manager can make a bad property good and a good property great. Good asset managers are proactive. They hold their team accountable and they measure everything to see where the bottlenecks are. Like I said, this isn't the time for the faint of heart. Okay, good asset management is hard work. Multifamily real estate is a business, and for those that don't treat it as such, will pay a price. It's been a great run the last 10 years, and the mediocre operators did well, and the strong operators did great. But with rising rates, the men will separate from the boys. This isn't to say I'm not bullish, because I am. Everyone needs a roof over their head. we're over 5 million housing units short. They're not keeping up with, building fast enough. Certainly, a lot of those building permits have gotten stalled too with the rising rates and supply issues. I invest in areas of population growth, job growth, and low cost of living. There's still good opportunity out there, but be careful. Raising money is tougher right now. Don't bite off more than you can chew. A lot of people have lost a lot of money in the stock market and Bitcoin and are scared. But I'll leave you with this quote from Warren Buffett. Be fearful when others are greedy and greedy when others are fearful. I appreciate you tuning in. I'm Gary Lipsky with Break of Day Capital. I'll see you next week.